Hello, madam. Myself, Vicky, this side. I'm a 22-year-old product manager and I'm earning around 6 lakhs per year. And for that reason, the government wants to tax me. तो मैं सोच रहा था कोई अच्छे टैक्स सेविंग स्कीम्स है क्या?
Oh, sure, sir. There's actually no better option to save on taxes than a provident fund.
Oh, perfect. Here is 40,000 rupees in an envelope. Keep it safe, alright? Also, after work, you wanna catch dinner or something? Would you be interested in that?
40,000 kafi hai, sir. I'm only interested in your investment and not in your horrible personality. Thank you.
Of course. Sorry. Professionalism is very important. Sorry. But thank you. Keep the money safe. Okay, thank you.
Okay, what is going on in finance world now? Let's see.
This is a great moment in history because the middle class is extremely happy with the new union budget as an income of up to 7 lakhs will now not be taxed. I repeat. Are you serious? What the Wait, madam, can you give my money back? It turns out I don't have to pay any income tax. मेरे income level पे कोई tax ही नहीं है यार.
Oh, sorry, sir. Provident fund पर तो 15-year lock-in period है. You cannot redeem those funds now.
एक मिनट. तुम्हें मालूम था कि I'm not tax liable. Then why did you let me invest?
Sir, you only wanted a tax-saving scheme, so I told you which one to invest in. I was just doing my job.
On 1st February, our Finance Minister Nirmala Sitharaman made a startling announcement that caught eyes of millions of Indians.
Now I come to what everyone is waiting for. Personal income tax. I have 5 major announcements to make in this regard. These primarily benefit our hard-working middle class.
So you can see, the government claims to have designed this new tax regime to benefit the hard-working middle class like you and me. You must have read in numerous articles by now that how the better tax slabs and tax rates of new regime might help you save an extra 52,000. But that may not be the case with majority of taxpayers. In fact, what I'm going to tell you may shock you. It's likely that 99% of the taxpayers might not benefit at all from the new changes introduced in the new tax regime. And that poses a major question mark on the attractiveness of the new regime. So watch this video till the end because you'll not only understand how these tax slabs and regimes operate, but you'll also master at choosing which regime is suitable for you and how to save maximum on taxes. The new tax regime was initially launched on April 1st, 2020. Since then, the government had 2 kids. The eldest son was the old regime and the youngest son was the new regime. But why did the government even come up with new tax regime? The government was basically trying to reduce the complexity of filing taxes to transition to a simpler tax regime so that the litigation is reduced. For common people like us, it would mean more cash in hand and more flexibility to invest in any instrument that an individual likes. But in spite of the starry launch, the new tax regime failed to gain popularity. For instance, less than 1% taxpayers, mind you, less than 1% taxpayers who filed their returns this year through Clear Portal opted for the new tax regime. However, it turns out that the new tax regime is still the government's favorite kid. So much so that the government wants to make it default tax regime.
Is the project. They have their first kid, they're like, oh my god, I will make you the best kid. You do whatever you want. See, we tried this pressure thing. It doesn't work. Your sister is crazy.
In fact, Tarun Bajaj, who has recently retired as the Revenue Secretary, has said in the past that the old tax regime with deductions must go and the newer tax regime must be even more incentivized. And to everyone's surprise, in this budget session, government came with a bazooka. The new tax regime was given a facelift with brand new packaging. It's been made extremely incentivized. However, the old tax regime has become that abandoned kid. The government did not bother to bring even a single change into old tax regime. So what exactly are the changes that Budget 2023 has introduced into new tax regime? First, higher rebate. People who have a taxable income of up to rupees 7 lakhs will not have to pay any tax under the new regime. Second, the government has extended the benefit of rupees 50,000 standard deduction for salaried and pension taxpayers. Until now, this benefit was only available under the old regime. So what this means is that your taxable income is further reduced by 50,000 without any extra efforts. The biggest part of the makeover was the lower tax rates and better tax slabs. For one, The tax exemption limit in the new regime has been increased from 2.5 to 3 lakhs. It stays at 2.5 lakhs in the old one. Also, the number of tax slabs in the new regime have been reduced from 6 to just 5, and the tax rates within these slabs have also been reduced. So ultimately, the tax liability in the new regime has been reduced. But again, old regime and its tax slabs have zero changes whatsoever. Fourth, reduction in surcharge for the super rich. The Indian government admits that it has been imposing higher tax rates for the HNIs compared to other nations. So this time it wanted to charm the super rich. Starting April, the surcharge on tax has been reduced from 37% to 25% for those with incomes above rupees 5 crore. But you guessed it right. This is only applicable in the new regime. Perhaps this will encourage the super rich to stop leaving the country and settling abroad. So if we had to summarize the new regime in just 2 lines, it would mean more cash in hand for people and more freedom for them to invest in any instrument that they like. So in spite of all of this, why do we still think that the old regime is still beneficial for majority of taxpayers? Does the new regime flat out trump the older one? Sure, the government has made a lot of efforts to make the new regime look lucrative, but is that enough? There are nearly 70 odd exemptions and deductions under the old tax regime that can reduce the taxable income of an individual significantly. These include income deduction on investments up to rupees 1.5 lakhs per year, health insurance premium, interest on home loans, house rental allowance, medical allowance, conveyance allowance, professional tax, and many more. The old tax regime, by enforcing investments into these tax-saving instruments, inculcates a saving habit in individuals, especially the youth, for their future goals like marriage, education, buying a house, property, etc. In fact, India's gross savings rate in 2021 was 30%. This is extremely huge. In fact, domestic savings by an individual is the biggest contributor in this. Now that we know the difference between the new and the old tax regime, it's time for the question that everybody needs answer to. Which tax regime should you follow? Well, old tax regime does give you a benefit of saving much more taxes compared to the new tax regime, especially as your income level increases. But that will depend largely on the deductions that you're able to claim. Most of you will be interested to know what is the minimum amount of deductions that you should be claiming to be able to match the tax liability of old tax regime as compared to the new tax regime. Here we have created this table exactly for that. You can see different income ranges in the first column. Considering the standard deductions, in the third column you can see what is the tax liability under the new regime as per the new tax rates. Now, to save the same amount of tax under the old regime, you will need additional deductions as mentioned in the column 4. So to simplify, if you're able to save deductions worth more than the deductions mentioned in the column 4, old regime is 100% more beneficial for you. Let's understand by taking 3 examples of 3 different scenarios. First, if you have a salary of 10 lakhs, you will have to pay 52.5 thousand in taxes under the new regime. However, if you claim deductions of around 2.5 lakhs on top of the standard deductions, you will be liable to pay the same amount of taxes under the old regime too. So if you can manage deductions above 2.5 lakhs, you can definitely go for old regime and save more taxes. Now, if you have a salary of 15 lakhs, you will have to pay 1.4 lakhs in taxes under the new regime. And if you claim deductions of around 3.6 lakhs on top of the standard deductions, you will be liable to pay same amount under the old regime. And finally, let's say you have a salary of 20 lakhs. You will have to pay 2.85 lakhs in taxes under new regime. But if you're able to claim deductions of 3.75 lakhs on top of the standard deductions, you will have to pay same amount of taxes under the old regime. In fact, for a salary of above 15 lakhs, if your deductions are more than 3.75 lakhs, you'll always save more in old regime. In fact, if you maximize your deductions, which can be up to 5.27 lakhs, your liability to pay taxes for an income of 10 lakhs becomes 0. For 15 lakhs, it becomes 1.1 lakhs, 30,000 less than the new regime. And for an income of 20 lakhs, it becomes 2.6 lakhs, about 25,000 less than the new regime. Now you will be curious as to how can you maximize deductions under various sections. So here's a table that we have curated for you where you can see what are the maximum possible deductions possible under various categories. You can claim deductions under various sections, including section 80C, which comprises PPF, ELSS, etc. Maximum deductions in this are 1.5 lakhs. NPS, maximum deductions possible in this category are 50,000. For home loan interest, your maximum deductions can be about 2 lakhs. For Mediclaim, 25,000. For parents' Mediclaim, 50,000. And standard deduction can be 52,500. So the total deductions that you can claim can be maximized to up to 5.27 lakhs. We have attached an Excel sheet with all these calculations and numbers for you, which you can refer to, and based on the deductions and your income range, you can figure out which tax regime do you want to follow. It's evident from all of this that old tax regime can help you save more on taxes compared to the new tax regime for income levels which are higher. The government hence needs to incentivize new tax regime even more to be able to see greater participation from people. But the government being so biased towards new tax regime does raise some questions, because it's not just the old regime that's going to fade away. Various favorite saving schemes of people like PPF, NPS, ELSS are also going to lose their identity. In fact, former Finance Minister P. Chidambaran commented on the new budget saying that with the advent of new tax regime, the importance of personal savings in a developing country has been thrown out. In the absence of such a state-provided safety net for so many people, personal savings is the only social security which has now been compromised. The government is probably targeting larger tax revenues and perhaps also wants to increase consumption by leaving more money in the hands of people. The benefits introduced in the new tax regime are likely to induce expenditure, which is also positive for the economy. Scrapping off exemptions and reducing incentives in taxes would reduce people's willingness, and especially youngsters' willingness, to invest in long-term financial instruments and might increase unnecessary expenditure. So, given the speculation that the old regime might just be scrapped off in the next few years, should you be opting for the old tax regime, or should you be saving in those tax-saving instruments? Well, I personally, in spite of all the tax benefits that the old regime has to offer, would like to choose new tax regime. Why? Because it gives me the freedom to invest on my own terms. I can also choose more riskier asset classes that might help me generate more wealth in the longer run. So, even if the newer tax regime is better for you in terms of lower tax, it's a good idea to continue with certain investments, even if they don't give you any tax advantage. For example, insurance and health premium, or safe instruments like investing into PPF or NPS. What's good and simple for the government might not be good and simple for you. More money in hand and higher consumption is all fine, but savings, investing, and financial protection should never go out of fashion, whether they're tax breaks or not. By the way, if you're looking to save into tax-saving instruments, go check out our Stack app. You will get expert-curated portfolio which will help you build wealth while saving on taxes. So after watching this entire video, what have you decided? Which tax regime are you going to follow? Do let us know in the comments. And if you found this video insightful and you got something new to learn, don't forget to like this video and subscribe to Stack, because we're going to come up with more such content and videos on building and growing wealth very soon.